Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're looking at here is a chart of the market. This is the mini S&P 500 futures contract, front month in nature, looking at a last print of 1540. What's interesting is, and particularly important about this video, is that we're actually finally, after almost a year, moving to a state of neutrality on our official market timing. That is to say that we've now booked, theoretically and hypothetically, over 200 points in free official market timing bias signals. And of course, we went to bullish, as you can see. And again, I am sorry for the grayed out now. Everything's in color, vibrancy. Moving to officially bullish, as you can see right here at 1338.50 on July 6, 2012. So quite a while ago, we actually rode through this very strong and unnerving test of the our key mother of all trend following support resistance measures in this 200-day, actually a convergence of a 200-day EMA as well as an SMA. So it was pretty strong support there. So we were able to ride it out, and thankfully so, as the market has gone. That was essentially our entry point around 1340. Now we've gone almost straight up. 200 points, 1, 2, 3, 4, in about 4.5 months, overall at about 8 or 9 months. So what we're doing, we're moving to officially neutral in the market. That's not to say that it's not going to go higher. The actual highs are about 20 points or so, depending on what market you're looking at. The spiders, the S&P cash, S&P 500 futures. So we've got a little more leg room to go, but we're going to go ahead and just book our profits, take our 200 points in the S&Ps, which of course is what, 1,005. That's quite a bit of money. You're looking at about $10,000, I'm guessing. I'm sorry. Yeah, that's about $10,000. So not too bad per contract in less than a year. A 200% gain, and that's what we're going to go ahead and book. Right now we do expect that we're going to get a little more room to the upside, at least retest the old highs, and then we're going to probably get a swoon to come back down to reality, and then we might even go higher. But for now, we're moving to officially neutral on the market. Having said that, that's our official stance. Having said that, we are still looking at a predominantly and overwhelmingly bullish picture. You actually see a hard turn higher here in momentum. We're getting a short-term bullish signal there. Here you have the short-term bullishness there. Intermediate term, we're still bullish as we're above the zero line. From a directional movement perspective, it's all bull. You're actually not only short-term bullish, but you're getting an intermediate-term bullish turn as well in terms of directional movement. In terms of price technicals, obviously we're at a new high. Price technicals suggesting full all-out bullishness, but we're going to go ahead and again switch to official market, our official market timing to neutral as of now to go ahead and book the 200 points. We might get back in on the market depending on certain characteristics, but all in all, we're going to book the 200 points and free official market timing. So those of you following these videos have booked, assuming you were trading the signals, have bought that contract, maybe a little bit of decay, time decay that is, as we roll over from contract to contract, but nevertheless 200 points in the S&Ps thanks to the MiniAnalyst.com's official market timing. So moving on, that is a quick look at the daily chart of the market. We can actually switch over. Look quickly at the ES on the weekly. Pretty interesting perspective. Wow, who would be taking profits at new highs? Well, as traders, we definitely want to be taking profits into strong moves, particularly when we've had such this was one of our best buy signals. This was back in 11. The financial crisis meltdown, SP's downgrade of the United States debt, and that was the move there. And we definitely went unofficially bullish there to all of our clients, saying that we can't go official, we don't have the criterion met yet, but unofficially this is the buy signal. Believe it or not, that was, and look at that, almost the bottom. We did have to wait for a little more follow through, in which we got, and of course we got the official buy signal there. I'm not sure exactly where that one exited. I would have to go back and look. There should certainly be an exit to neutrality, if not bearishness, and we definitely would have to go scroll back through to find out where that was. Nevertheless, we've not had an update on our stance since going back to officially bullish on 1338 in July, and of course that is the weekly. What a beautiful move. The retest of this key measure of trend following support resistance in the blue line. There you can see, and we've just quite extended. And anytime you get extended, there you go. Take profits. Boom. Take profits. Boom. And that's exactly what we're doing now, which is taking profits of 200 points. So that's the S&P weekly. We're going to go ahead and switch over to a quick look at the intraday. And as you can see, market was very quiet yesterday. The market, today's the 6th day of March, by the way, Wednesday. Very quiet yesterday. Very quiet it has been today. The market, as we've often mentioned, yet another reason why we're booking our profits a bit early at the 40s. The market loves the 40s and the 80s. We always like to initiate positions at 40s, 80s. And that's exactly what we're doing, initiating or exiting positions at 40s or 80s, and that's exactly what we're doing today, exiting a very long-term position at a key 40 level. A lot of people look for the 50s, the 25s, maybe even the 20s, and certainly the round numbers. We like to key off the 40s and the 50s. As you can see, having said that, we definitely have some pretty severe divergences and looking at our proprietary indicators, our intraday dynamics, you can see that's actually bearish there, bearish, 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 almost bearish. Extreme divergence and actual bearish moves midday today. So really the market is definitely getting a bit tired. It's had some pretty impressive moves. Look at this move just over the last 7-8 days. Very impressive move as we've completely erased the impressive sell-off. I believe it was Greece. Some news event, which was just a fantastic opportunity for traders. We made quite a bit of money both on the way down and on the way up, and it's been pretty impressive. Nevertheless, looking at the intraday dynamics, you can see it was fully bullish here, switched to bullish, came into the trend, bullish, 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 coming off of a strong positive divergence. Here we are at a new low. And we've got a positive divergence relative, as you can see, positive divergence relative, positive divergence relative, and again, positive divergence relative. Beautiful buying opportunity, and look, lo and behold, look at the move that we see higher. We get a little bit of a swoon that day, a great opportunity to trade, and of course we get to move back higher this week. So it's been a great and fantastic few months of trading. We're going to go ahead and minimize that. And we'll just take a look. See, here's our VIX equity put call ratio. Not really making any trades. This is our free system. As you can see, we'll pull up the performance report. Taking a look at the VIX, obviously pretty bullish. Really, we've completely reversed all the fear, taken all the erosion and complacency out of the market, completely erased the fear here, right back in terms of the put call ratio, right back into the sweet spot, if you will, with no particular determination of the market. So you know the market could really go higher, actually here without any fear. Sorry, complacency. The market could definitely move higher, and there's of course the equity curve line of the VIX equity per call ratio signal that's free for you to trade, and we're going to go ahead and take a look at some of our trading models. This is the EVR3 TSR. Now what we look for here are the green dots, and of course we just got a green dot. A green dot means a new high in equity for the trading model, and I always talk about this in the videos, a green dot portfolio. Well, in actuality, most of our models, certainly the models that we trade as a firm, that our clients trade, a lot of the models are upper echelon in terms of green dots, top tier. We have essentially 3 tiers of trading models. For instance, a lot of the key portfolios, MSA UDT and Valerius trade anywhere from tier 3 to tier 2 to tier 1 trading models. We do try and keep as diversified and non-correlated as possible. That's a very key concept that we've always had, which is why we've been in business almost a decade now, going back to 2000. So this year it'll be a decade. This November of 2013 will be a decade, and that's how you've been around. That's how you stay in business, is serving the clients, making sure the one goal is that the clients make money, and that's always been our goal. If you're not making the clients money, you're not going to be around. That's why we've been around for nearly a decade. So that's the EVF. And of course, as you can see, developing good models to make your clients money. As you can see, green dot right there for the EVR3 TSR. Here's the EVR3 AC TSR, another green dot, somewhat correlated. EVR3 filtered green dot, as you can see. Beautiful equity curves that we try and update you on whenever we do a video. R60F, not quite as well, kind of lackluster. EMDS, green dot, beautiful recent run. We've really enjoyed that run lately in the EMDS. EVR3 VSR just had a green dot recently. MRSE and PTL, green dot, beautiful, in another beautiful trade, as you can see right there. Absolutely stunning trade. Another couple grand a contract. We just booked. Excuse me, and that of course isn't represented. These are closing trades. The green dot is the closed trade. That of course is that trade right there, MRC and PTO. R30C, just off a green dot. R30B, just off a green dot. Here we see green dot for R30A. Beautiful. Just booking another winner right there. Another green dot. Fantastic trading model at $5,600 is the most drawdown. $250 every time you place a trade after slippage and commissions, $86,000. And of course, as you notice, all of these are over the last decade. So all of these performances are over the last decade. So we definitely want, these are elite models, tried and true, time-tested performance. EVMCM, again, all over the last decade. In a little bit of a trade today, taking on 3 longs, not too bad. Looking for a nice little push higher, but the market's getting ready to close. So there won't be any free informational day trade today. Unfortunately, there's a CBR, kind of lackluster a little bit. ISRD, actually in a short position, but a green dot. Look at that beautiful green dot. Just closed another green dot again. That's going back to 99. So these are all time-tested models that of course we trade. And there you have the EVR3, the standard EVR3, again going back 10 years, green dot. And ESM30MX, just off a green dot. We'll have a look at this, $415,000 in profit. A couple $100 every time you place a trade. You're going to have a $32,000 drawdown to make $400,000 over a decade. And that's not exactly the entire story. You're definitely going to have to look at the intraday peak to valley. So you're going to have to $100,000 to make $400,000 over a decade. You're going to have to at least have that plus margin, $150,000 just to trade the M30X. And of course the X is the extreme version of the ESM30, which we can take a look at the performance graphs at. Just closed at a fantastic winner, green dot. The list just goes on and on. So we're going to go ahead and switch over and look at the there we go. So here is the website, the MiniAnalyst.com, and we're going to look at a few portfolios actually. Let's pull this down. You can look at portfolios, you can look at trading videos, the play of the day, which is the free intraday trade, or you have any questions about just about anything market related or getting started, you can ask an analyst there. But we're going to go ahead and take a look at the Valerius. Got some updated returns here. You actually have an amazing opportunity to get involved in these portfolios. So here's Valerius. Annualized return is 68.3% after slippage and commissions. Maximum peak to valley drawdown, again, that can be quite considerable relative to the closed trade drawdown. As you just saw, it was 30,000, but 98,000 peak to valley. Just 20%. And in this business and futures trading, where you can make 70% every year, 100% every year, to have just a drawdown of 70 or 20%, that's pretty impressive. So you're looking at over in excess of maybe a 3.5, 3.3, 3.4 reward to risk ratio. And of course, a 3.4 reward to risk ratio is pretty impressive. So there you have, sitting on $51,108 in cumulative profit. That actually doesn't take into account the commissions, so you really have to factor in, you have to kind of eyeball. It's about $40,000 after slippage and commissions. Valerius with commissions, trading with at MB. But you can get involved in this portfolio for just, yeah, $344 a month, which is unheard of for some of the models. It trades some of the models that we just looked at. Those are being offered here in the Valerius. $40,000 in profit. We're going to go ahead and switch over. Just $344 a month, $688 a quarter. $688 a quarter. That is unbelievable. Just over $200 a month to trade a $50,000 portfolio. And there you see, there's a quick snapshot. Up, retrace, up, retrace, up, very nice, retrace, up, new highs. This is exactly how we trade, what we trade. And this is why we always recommend, because we'll have clients who will stop trading right here. Oh, this isn't, in fact, we just had one, I believe it was yesterday, stop trading the MSAUDT. And we're thinking to ourselves, gosh, man, that is really the wrong time. You definitely want to be buying here, buying here, buying here. So we're going to go ahead and take a look at the aforementioned MSAUDT. $244 a month, or a quarter is just $488 for the first quarter, then just $688. You're still saving quite a bit of money. $688 a quarter after that, and you can actually use a promo code to save more money. $14,000 in cumulative profit. There you have pullback there. Okay, so it wasn't much of a pullback, but the client did quit yesterday on the MSAUDT for almost no reason. Of course, you know, some people quit for various reasons, but 258% annualized return against a max drawdown of just 31%. Not sure exactly why you would quit, but nevertheless, we do have some clients who will quit around here. We're always saying scale back around here. Definitely wait to add exposure here. If you've made all this money, if you're started with $10,000 and you're up to $20,000, and you want to add another unit, another subscription to trade another unit, 6 lots essentially, then, you know, wait for a little bit of a drawdown. So here's a little bit, I mean, a tiny drawdown, but that's when you want to be taking advantage of trading. And we'll look at the MA disc right here, as you can see, also just off the new highs, but this one has higher commission. So the $7,600 number is pre-commissions. This is the number you actually want to look at here. MiniAnalyst.com disc with commissions, and that's with MB, I believe, right there, MB trading commission. So you're looking at about a $5,000. So you've made $5,000 on MA disc, 500% annualized return against 18% drawdown, and you can trade that for just $488 a quarter, then $688 a quarter after that. Pretty impressive stuff. Just go to the website. All you have to do is click Add to Cart. You definitely want to, not particularly interested in clients coming on for just a month and quitting here. We definitely want a commitment. We'd like a year. That's why we have various incentives to do a year, but you can add to cart a minimum of a quarter. That's why why would you do $244 a month if you could do $488 a quarter? You can even enter this promo code that we have here to save an additional 5%. And so $463 to trade that. Once you become a subscriber, you'll get instructions to set up the auto trade account, and it all runs. You certainly don't have to have your computer. You don't have to speak with anyone. You don't have to talk with anyone. You don't have to do anything. In fact, it's preferable that you don't certainly manage any positions or call your broker and say, hey, I want to book these profits or get out now. Definitely, that's why we've been doing this for almost 20 years. You definitely want, and as in MiniAnalyst.com, 10 years. I've been doing this for almost 20 years. You definitely want to let the professionals who get paid to do it manage the portfolios and not try and trade around or quit, as mentioned, quit around these opportunities when we're saying you definitely want to not only stick around but maybe consider adding exposure. So there's the video in under 20 minutes. If you guys have any questions, please feel free to shoot us an email to admin@MiniAnalyst.com. Go to the website, aforementioned, chat with the support team live if you have any questions, and I hope you enjoyed the video, quick snapshot, and the 200 points that we just booked in our official market timing. We will see you next time. Take care.